you the best available tips, ideas and information on how to go about finding and researching your very own stocks and listed stocks on all exchanges over the world, which you can use to build towards your own portfolios, all with the aim of making money, guys. That's the aim, that's the bottom line, that's what everyone wants to do. The difference between me and others is that I'm not promising every stock that I pick is an absolute winner. That's just impossible to do. What I'm aiming to do is give everyone the best tools possible to research the companies that would fit best into their portfolios and look out for any pitfalls. So if you like what I'm doing, guys, please do hit the subscribe button. Every subscription is very much appreciated. And also go ahead and like the video if it's something that you have found valuable. And further, leave any comments, constructive or otherwise, in the comment section. And if there are any stocks that you want me to apply my research methods to, that would be really interesting to do some stocks that are recommended by people. So today, guys, I've got a really interesting company that's kind of popped up on my radar. I wasn't actually expecting to do a video today, but there's been a lot of water cooler chat and just general buzz and noise around the company, which you can see on the screen is Nikola, which is a US-based trucking company which centers around environmentally friendly trucks, albeit by battery power or hydrogen produced engines, combustion engines for the trucking industry, right? So it's a big company. It's getting a lot of attention at the moment in the news and just general articles popping up over. So I thought I would do a bit of research into the company to see if it's a viable option for potential value investing or any other portfolios types that people have whilst watching this video. So yeah, let's jump into it because it's an interesting company. It's got a lot going on, but it's also got some areas which I think people may not be aware of, which I think they should be before taking that crucial decision as to whether they want to invest. So if we just have a look at the website, which is, as you'll know, is where I always like to start. As I said, we can see that Nikola is a trucking company. It has a range of products, which we can see here, the TRE-FCV, the BEV and modular solutions are some of the products that they offer to the market, and they offer these across the USA and wider. The website is very slick actually. It looks very centered around producing and dominating the environmental trucking industry. There's another part to the website which I will come back to, which I think is a key factor in whether you should invest in this company or not. But I think it's worth understanding the companies from a product perspective first before we jump into the financials and then go back to some warning signs. So if we go to the stock I've got plug in there, which is a rival company of Nikola, could you say, or at least a similar company. Let's talk about Nikola. So here we have the overview of the company. We have the radar that's provided by Simply Wall Street, which I don't apply too much value to. It's just a nice little pretty bubble on a chart that gives you a quick indication, albeit not factual overview of what the company is doing, where it's going and how it's valued. So as always, I like to start by looking at the market cap of a company. I like to look for market caps between 50 to 100 mil, up to anywhere up to 1 million, 1.1 billion, purely for the fact that these are the companies in this area I find have the most potential for growth, and I found most success over the years in investing in. So as you can see here, guys, we've got a market value of 694.4 million, which sits pretty square in the middle of the range that I like to look for. So number one tick, that's great, let's keep it simple. On to the health of the company. Let's have a look at the balance sheet that Nikola is possessing. We know it's a fairly big company, obviously worth over $500 million. So let's have a look at how that plays out and transpires to the actual balance sheet. So if we scroll down here, guys, we can see A very healthy looking balance sheet. It has short-term assets of 469.31 compared to short-term liabilities of 271.29 million, which is great. And then you look at the long-term side of things, which is 682 million of long-term assets compared to 294.59 long-term liabilities. Now this is good because on both sides the blue surpasses the green, which is a very simple way of looking at it, but that's a quick indication that the balance sheet is healthy. Better yet, the short-term assets outweigh the long-term liabilities. Long-term liabilities being, debt being used to grow and progress the business in any number of ways, which you can obviously find out on the website. But debt costs money. Has the company got enough of a cash runway and cash liquid assets available to fund those liabilities? We can see here that it does, and simply outlays it here for you in 2 quick sentences. So if we go down to the sort of layer below the balance sheet above into a bit more detail, we can see the breakdown here is roughly £350 million in cash and short-term investments, 484 million in physical assets, 72 in stock or inventory, and then you've got receivables of 3.7 compared to a debt of 243. So we can see that there's a healthy balance sheet here, and below there's a little bit of a cash runway analysis, which I also like to have a quick look at, that has a sufficient cash runway for 8 months based on its free cash flow, which is again a useful insight into how the company is operating and paying for its debt. If we scroll up a little bit, you can see a comparison between its debt to equity. Generally, having done test 1 and test 2 already, this is just sort of proof of that in a way. So you don't have to worry too much about the debt equity ratio, although if it's continually rising and that gap between the red and the blue line is squeezing, you want to be careful and make sure that there is enough liquid assets in the business to continue to fund the increase in debt and the increase in debt to equity ratio. So that's great. So good market cap for investment purposes, good balance sheet, no risks here, two ticks so far. So let's now go on to the past performance, which will indicate how this business has been operating to date and if there are any risks that we need to look out for. So the first thing I like to look at is the revenue position of the company. Has the revenue been going up year on year? With Nikola, we can see that from 2018 to sort of 2021, there was a very minimal revenue being made. We can see from 2022 onwards, we have a spike of revenue up to 58.515 million around the end of March 2023. And since then, it's dipped to just over half on 32.65 million. So it's a pretty sporadic revenue line. What you want ideally is a very linear upward trending line that's showing growth year on year of revenue. But it doesn't always tell the whole story. So let's have a look at the earnings. And this is where the red flags start to appear for me as a value investor anyway, and not so much of a punter. We can see here that from the start of the revenue, where we checked in 2018, which had 486k, there was a loss of 17.556 million, and this has continued to grow in the opposite direction to revenue. When you get to that height of around 31st March 23, there's a loss of $730.448 million dollars, which continues to grow and is at the last accounting date is around $867 million. So one of my keep it simple rules is I never invest in a company that's never been profit making. Now that's not to say that Nikola is never going to be profit making and that these losses are not being are not funded or not being not just a part of this business's kind of lifespan, which starts off with a lot of heavy infrastructure investment, a lot of growth in technology and R&D, very costly in the primitive years before then becoming coming into fruition and actually being profitable. And that might mean that you can get in early, but for me, this is very, very early potentially. Given the industry we know is green, I can see that coming to the fore in the next 5, 10, 15 years. Is it still too early for this company to still establishing itself? For me, keeping it simple, if it's no profits, I don't want to know. And I'm out at this stage, but let's keep reviewing for anyone else whose portfolio this might fit into, because people like speculative stock. I wouldn't recommend it, and it's not going to form part of my portfolio, but if it will help you, then that's great. So let's go down to whether or not the company pays a dividend. I mean, you can guess that if a company's never made profit, then with no profits available, there have been no dividends. And again, this is a red flag for me. Whether or not it will pay dividends when it is making a profit is a different matter, and that will be something that will come out eventually if Nikola ever does hit the green in terms of its end of year earnings. So healthy balance sheet, not so healthy profit and loss, not something I'm willing to invest in. Let's continue on to the valuation and the current price to see if there's anything else. Now, if you remember and you've watched any of my other videos, you'll know that the ratio that I like to use is the price earnings ratio, which gives you a nice indication of how, whether a company is valued over or under expectation compared to what it actually does and produces. Because the company of Nikola is not profit making, the PE ratio is thrown all out and you won't get a useful indication from this. So to me, I mean, the big red circle should be a big red X, but we can't use the PE ratio in this instance because it's not profit earning. So what we'll use here, or what can be used here, is a price to sales ratio, which is essentially how much an investor pays per dollar compared to the revenue produced by the company. So here we have a PS ratio of 21.3, and compared that to the industry, which actually has Plug Power in, that's quite high, it's quite expensive. So to me, Nikola is looking already heavily priced in by the market without the substantial fundamental green areas and principles in its balance sheet and trading profit and loss account that would underpin that value. So to me, it's too high for what it actually is and is doing at the moment. The market has priced it in for its future earnings. So if you're going to get into this, you are going to have to ride out some stock share price volatility for quite some time on the promise that this company will be profit making. And for me, keeping it simple, that's just not the type of stock I want to be getting involved with. So let's just keep going through the tests, because I think it might be still useful for anyone else who still wants to buy the stock, even though I've given you some significant warning signs. It might be something your heart is set on, and I can't tear you away. So what we have here is a bit of a strange series of transactions, which I think I can iron out slightly. I think we have a lot of share sales from insider transactions, which is quite risky, or at least highlights a potential risk area. The amounts involved aren't massive, so you can kind of, without dissecting each single one, there's not major alarm bells, but there's enough there to give you an indication that people are insider selling the stock at like 196, plummeting again to 112, plummeting again to 68. So, they knew something was going on, and at the moment, I would say that this is a risky set of insider transactions to make a gamble on either way as to whether this stock is going to continue to drop or start reversing at some point. What we do have is quite an interesting purchase from Stephen Gursky, who's bought 1 million shares at 54p, 54 cents, sorry, I'm a Brit, keep getting the currency wrong, which equates to 540,000 US dollars. You can see here Stephen Gursky is the president. He makes a compensation package total of 8.8 million and he owns about 0.2. So he's doubled his investment with that 540, well, over doubled, sorry, just under doubled, because he owns 540,000 there, he's 1.4, so yeah, it's about a third. So it's interesting to see that the new president here has come in and bought 1 million shares at this time. Whether or not, to me, that's an indication that share price is going to go up, I just don't know at this point. And where I don't know and it's not obvious to me, I just don't recommend ever taking a dice roll on especially this sort of mess that's going on here. Okay, so if that hasn't deterred you and you're still ready to pull the trigger, there's one last thing I do think you should be aware of, which is on the website, a chairman of a board by Steve Schindler here is asking for current stockholders to vote and vote in favour of a reverse stock split. Now, reverse stock split is essentially diluting or reducing the number of shares that are outstanding, which naturally will increase the price because the supply will go down, i.e. the price goes up. And the reason behind this is because there are NASDAQ regulations which state that a company must be firmly trading above $1. Otherwise, it faces a delisting from the NASDAQ risk. To me, with this still being ambiguous and not yet decided, I think the deadline is I think the deadline was like 4th of June or something. Yeah, there you go, the 4th of June. So we're very close to that deadline for people still to vote. So it's still not guaranteed that this company will be listed on the NASDAQ in the future, which is a major risk, guys, because if a company's delisted from the NASDAQ, it then moves from the NASDAQ to the OTC market, the over-the-counter market, and that makes it just turns the art of buying and selling this share much harder because of a major reduction in the liquidity, and therefore, if you are holding a share and the price has moved and the stock has moved from the NASDAQ to the OTC, you are in a major risk of losing heavy value on your share because of the lack of liquidity, and it might just drop like an absolute knife. And then for any potential investors who are yet to purchase the thing, not being kicked out of the NASDAQ reputationally, being delisted, sorry, reputationally is a massive hit, and it's a major risk increase for potential investors, even those looking to take a bit of a punt. So, to me, with this being undecided, I think it's the nail in the coffin for Nikola, guys. I would say anyone who is willing to put any amount of money into this company is doing so on a dice roll, or if part of a heavy, high risk portfolio, in which case, if you accept the risk, absolutely fine, you crack on and do it. My advice to the simple investor is steer well clear. So that's it from me. I hope that has been interesting to you and has given you all the information, or at least pointed you in the right direction of the information needed to assess whether you want to invest in Nikola. If you found this useful, guys, please do hit that subscribe button. Do it now, do it now, do it now. I encourage you to do so and like and leave comments. It's all very much appreciated, and I hope you're valuing what I'm doing. And yeah, just keep it simple, guys, and I will be back with more company analysis in the near future.